Test. Test. Nak tanya masa dah mula ke? Boleh mula, nanti tekan bell kita gas lah. Okay. Alright. Assalamualaikum and welcome back everyone to BFM 89.9. And today, me, your host, Muhammad Atif Adam, and in our another Ringgit and Cents episode. So can you go to the next slide, brother? Alright. As for today's session, it's a bit informal for us since it's just a podcast on the radio. So I'll set the scene with a question. If you guys have 100,000 ringgit right now, would you, and you have two investment options. The first one isn't exactly ethical but gives you fast return, while the other one is a green sustainable return but it's a bit slower. So which one would you choose? So that question sits right in the middle of our session today. Is the main dilemma of our topic, which is, as you can see, socially responsible investing versus profit maximization. So, next slide. So, sitting with me today, a few great panelists from few different backgrounds. Firstly, we got Mr. Ismail, right? From
Yes, sure.
From Phillip Capital. From Phillip Capital, we got Mr. Imran from PNB.
Yeah, thanks for having me.
We got Mr. Najmi Najib from the Security Commission, right?
Yes.
Yes, alright. So with these few people today, we will dissect and discuss this topic with few different opinions that comes from few different backgrounds. So inshallah this topic will be interesting and beneficial for us lah. I think we can go to the next question. Stop that, right? Oh, sorry. Okay, I'm sorry. Before going to the first question, I think I want to hear a few thoughts from my beloved panelists on this topic right here. I think Mr. Ismail can go first.
First of all, I would like to say thank you, Mr. Atif, for inviting me to have a session today. It was such an honor. So, honestly, as an investor myself, I'm pretty sure sitting with me here, we got a lot of investors. So, a lot of investors are more aware than ever as today. SRI or social responsible investment are gaining traction not just because it is ethical and Sharia compliant, but because people are thinking for a long term. They are thinking for a future. At Phillip Capital, myself as an investor, we could see a growing demand for ESG compliant funds, where people want to do good, meanwhile earning good. So that's my opinion regarding this topic.
Brother Imran? I'm sorry, Mr. Imran?
SRI, I would say SRI with the mixed data, its potential for the long-term stability, but it depends heavily on government support. So personally, I would say that it is not something that I will naturally lean, because SRI without strong incentive and proven result, it is still SRI.
Alright, so an opposing thoughts lah. Lastly, Mr. Najmi.
Okay, so I would like to take the chance today to maybe share a new perspective to you guys. So, as you know, we from the Securities Commission, our job is to maintain the fairness and stability in the market. So, let's ask again the question, why we need to maintain the fairness and stability in the market? The answer is to promote investor confidence. Why? Because we want investors' funds to flow into our market so that they help expand our economy. So you could say that the Securities Commission, our ultimate objective is actually to promote the growth of our local economy. So in regard to SRI and ESG investing, I would like to clarify and emphasize that we, the Securities Commission, do support ESG and SRI. However, when we do the rules and regulation and guidelines, we need to balance it with our economic growth. So if we enforce rules and regulations that are too strict for the companies, we are afraid that it might badly affect our local economy. So yeah, that's from me.
Alright, that's some great opening thoughts from our panelists. So I will go to our first question for this topic today. Can we go to the next slide? Alright, as you can see in the slide right here, a question to three of our panelists. Can ESG and profit really coexist? Or is this just an idealistic thinking? You know? So anybody would like to go first?
Allow me to go first.
Sila.
Okay. So from my opinion, can ESG and profit really coexist? So I think they can, but it also depends on how you define success. Of course, all of us define success differently. Maybe today, coming to today's session is one of my success, who knows? So if you are looking at quarterly earnings, ESG might look like a drag. But if you are thinking about risk, brand reputation, and for a long-term sustainability, then I would say it's an absolute smart investment for me. I think that's to answer your question.
But I mean, like based on your answer, we've seen companies like Tesla and Unilever do both. You know, they score the ESG part and they also profit really well. But then, if that's the case, are we just choosing the less bad companies to invest? Or
I would say exactly, because yeah, no company is perfect, but it says ESG isn't just about the moral high ground. It's about price, risk management, and also market significance. So I would say ESG is more like a direction that investors are pushed to it. So let me be honest, there is still a lot of friction between the ESG goal and also the current social and also economic demands.
alright, Nazmi, do you have anything to say there?
In my opinion, idealistically, I think ESG and profit maximization should coexist because the ESG itself should make the business and the company more sustainable in the long run, and hence they can exist in the longer period. So it should, by theoretically, gain profit, right? But however, due to maybe our technological development is still not good enough yet, so the ESG business model is still not cost efficient. So it is unable to generate good enough profit. But in the future, when the technological development is advanced enough, ESG business model would have a good and optimized level of cost efficiency and hence better profit maximization. So in the future, I have good belief that ESG and profit maximization can coexist. That's all from me.
Alright, okay. That's a great answer from three different opinions. You know, we also have Mr. Imran kind of opposing the ESG, right? So I think we can go to the next question. Alright. This right here is the main question of our topic today. Let's get back to this one. If I give each one of you, the first question, if I give each one of you 100,000 ringgit right now, how would you invest it and how much would you actually put in SRI, ESG funds? So maybe Ismail want to go first? Mr. Ismail?
100,000 ringgit, right?
Yes.
Yes, that's a quite big figure for me.
Yeah.
So, if you ask me, I would put around 40% into sectors like clean energy, ESG. So, I put it into a sector that are growing but still grounded in ethics and Sharia compliant, I would say. And then I'll use the rest of the money for dividend heavy or growth stocks, where I could earn faster money. Yes.
So 60-40 lah.
Yes.
Alright. Brother Imran, Mr. Imran. Yeah, that's the question.
Oh, the question is that.
Yeah.
Okay, so I would say 60-40, but in favor of the conventional, because SRI has its place, but I'll play more cautious. Because for me, ESG is still too volatile, overly dependent on policy frameworks, and it's still new. It's like gambling on my money. So I prefer the sector with clearer upside and also fewer string attached.
So it's because you're afraid that it's volatile, you say?
Yeah.
Alright. So I think we can go to the third question. Or do you have anything to say to that, Najmi?
My answer is same as you.
Same as him. Alright. On to the third question. Oh, by the way, thank you for those numbers allocations. So, third answer. Yeah. Can we go to the third question? Sorry. Alright. So this is quite personal. To all three of you, would you personally be okay with getting lower returns if it means your money is invested in a more socially responsible way? So if you're okay, why? If you're not, then why not?
For me myself, getting a lower return, right?
Yeah.
So I think that's a tough question for me, but I would say yes, I would agree with it. If the trade-off is not too extreme. You know, at the end of the day, I would rather earn 8% from a clean energy firm compare earning 10% from a company that exploiting a labor. You know, that peace of mind matters. What is the purpose of living if we are exploiting and we discriminate others? So I would say I would earn less in a clean and better sector.
Alright. You got anything to say, Mr. Najmi?
I think to answer this question, we should refer back to our investment objective lah. For example, if your objective of your investment is for the long term to grow your capital, right? So if your objective is for the long term, I think investing in ESG funds or SRI is better for you because those funds they are more compliant in terms of governance, environmental and sustainability. So these types of companies are usually more safe and stable and can provide consistent returns. But they are quite slow, but safe. So if your investment objective is for the long term, I think you better go for ESG because your capital and your funds is better protected. But if your investment objective is for short-term gains, for short-term profit, in order to make short-term profit, you will heavily rely on the market volatility. So sometimes companies that are ESG companies or ESG funds, they may not fulfill the volatility criteria. So if you strictly want to only invest in ESG companies, you will have a hard time to achieve your investment goal, which is to get the short-term profit. So it might be in your best interest to just ignore the ESG investment and just focus for whatever you're looking for.
Sorry. Brother Imran.
Lower return. So, audience. I'll just ask you a simple question. High return or low return? Yeah, it's easy, right? So, honestly, still need the strong reason to accept. Because if the gap is small, then it's okay. I'm sure for SRI. But if the reason is like it will be suffer or the return is quite blurry, right? So I think it's hard to justify because at the end, as we managing portfolio, we still have benchmark, and at the end of the day, numbers still speaks loudest.
Wow. By the way, can you ask the audience again which one do they prefer?
Yeah, I think they'll stick to their
No,
first
ask them
answer.
again. Just want to hear because they are not, motivated right now.
Okay, so I would like to hear. Okay, so high return or low return? Yeah, it's not just number. It's,
Can we go to the next question? Alright, so this question is for you guys. Do you remember when the BlackRock pull out from the net zero asset managers, right? So I want you guys to give your opinions on that, because I really thought it was kind of a big deal. It was something to me. Anybody would like to go first?
yeah, let me
Alright.
answer first, can?
Okay. Alright.
Okay, I would say I'm not surprised. Yeah, because it really matched with all of us suspected, majority of us, because like I said from the beginning, ESG is still evolving space and full of contradiction. And when it pushed to shove, even big players are not willing to sacrifice for the returns just for stay for ESG compliant.
Next, Mr. Najmi, if you have.
In my opinion, this event proved that voluntary commitment is not reliable, so it is, for me, almost useless. So this is why we need proper and structured rules and regulations. So that's for me.
It's my same question.
Regarding this BlackRock event, I would say it will be as a reminder for us as an investor, because as an investor itself, we couldn't just trust the label itself. We need to ask tough questions. ESG is not about being perfect. It's about being transparent and consistent. I think that's my opinion.
Alright. So I totally agree with you on that, because I used to think that ESG was just for feel-good investors or big institutions, but the more I learn, the more I see that it is also about putting your money and taking it away from reputational issues and protecting it from bad governance. So I think we can go to the last question before the Q&A. Can ESG business survive without government support or incentive, or are they still too dependent on it? Because they got lots of stuff, like tax brackets, subsidies. What do you think about that?
Okay, so to answer the questions, from the trend I could see right now, ESG business, a lot of them do rely on support from a government, from tax breaks, green financing, stuff like that. But that doesn't mean they are not viable. It just means they are too early in this adoption process.
I agree with you. I think our job is to help this business get off the ground and fly by themselves. So in the future, with enough economies of scale and innovation, they can survive on their own.
Do you have anything to say to that question?
I think it's very simple. To depend on government is still a big issue, because if let's say we don't have the government support, then they are not competitive to the market. So I'm not saying that it can evolve, but to put my capital in it, I need something serious.
Alright, okay. I think that's all from us today. We're running out of time, So thank you guys for the great discussion for today. But just a quick moment, Mr. Amar, can I have them to give me a quick closing thoughts, conclusion? Okay, make it short. Alright. Mr. Isma, any closing thoughts?
For me, it's simple. The future of finance is ethical. It's no longer just about the numbers itself. It's about the impact too. I would say SRI is here to stay. It may not always be profit maximization strategies, but it offers a long-term values, and I think that's all matters.
Can I continue? Yeah. Okay, so I think SRI is growing, no doubt about that. But for me, it is less ideal and more about desired consistently. So I would say SRI should be adjusted for its return to get into the tough market.
So for me, from the Securities Commission, we will continue to create a better regulatory environment and support both growth and sustainability. I would say that ESG should not be a cost, but instead it should be an investment. Yeah.
Alright, so I think that's all from us today. Thank you everyone for the great discussion, and I think right now is the time where we open up for questions from the audience, Group A. So any questions?
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you for the beautiful podcast and the nice discussion and deliberation on the topic. So I have one simple question, which would be, since you guys are discussing about SRI or socially responsible investment, how do you actually determine in Malaysia that an investment is sustainable and socially responsible? Because in the US they have indicators like the ESG index or ESG indicator, ESG scoring. So in Malaysia, how do investors determine that? Thank you.
Okay, thank you, Brother Rashid, for your good question. So to answer your question, what the question again? Okay, so Brother Rashid has mentioned that the US, they have better disclosure of information, like you can just browse the ESG ratings. In Malaysia, we actually also have some companies that have their own ESG ratings, usually given or provided by third-party companies, third-party analysts. But because perhaps I think because our market is quite small, so the coverage of the companies that are analyzed in Malaysia are very limited. So mostly only big and famous companies have their own ESG ratings. So I think it's quite a bit sad, I think, because our market is small, so the information itself is not much, because the analysts and third-party providers, they don't have enough motivation to study our local companies, because not many clients or customers demand for the information itself. Okay, so that's the first answer. The second answer is that we, the Securities Commission, does provide some guidelines for both fund manager corporate or fund manager business, and also for individual listed companies regarding the risk management, risk governance, and also ESG risk and ESG profile. So I think that should answer your question. Thank you. Next question, if any.
Sorry. So I think that's all from us today. Thank you everyone for the great questions. So Assalamualaikum.